Welcome to Hardman Talks. My name is Richard Angus and I'm Head of Business Development. Today we're going to be venturing into the private sector and focusing on one of the hottest topics, namely AI, where, judging by recent press comment, we're facing an AI bubble. But as we all know, two views make a market. So today I'm delighted to be joined by Jack Worne, Venture Associate and Head of Investor Relations at EHE Venture Studio, and we will be hearing from him shortly. However, before we start, I need to remind everyone that nothing discussed today should be interpreted as offering investment advice. However, if you do have comments or feedback on our conversation, please do not hesitate to contact me or Jack later. We will provide details. So while the UK entrepreneurial spirit remains alive and well, it's evident that investors have been in a risk-on mode and not sufficiently confident in many areas to commit further capital, especially to support smaller, ambitious companies. Although recently we have a feeling that they are becoming more engaged. So this is a great time to hear from parties that have recently decided to make commitments and are investigating further opportunities. And what better area to start than the rapidly emerging and complex world of AI. So I would like to welcome Jack and the audience and start with the first question for you, Jack, which is, please tell us a little bit more about yourself, about EHE Venture Studio, and why the business was started and who is on board.
Thanks, Richard. It's great to be here. My name's Jack. I'm part of the investment team at EHE Venture Studio. EHE stands for Entrepreneurs Helping Entrepreneurs. It was formed 8 years ago off the back of a couple of founders who went through their own respective exits and came together and decided that they wanted to do things a bit more transparently and a bit more. And that journey started by building a tech engineering team that build concept stage businesses, tech businesses from scratch, and the founders would then invest their own cash and take them on the journey of growth. We then launched a growth fund late 2024 to do that at a larger scale.
So perhaps it would be helpful to explain a little bit more about the Venture Studio business model, where it came from, and then we'll talk about how it differentiates you from other market participants, by which I mean other investors looking to participate in this massive global growth industry.
Sure. The Venture Studio, it's a more prominent concept in the US, less so prominent in the UK. It's regarded as a more de-risked approach to venture building and investing. Our Venture Studio consists of three core components. One is capital, which we have the fund, the VC fund. One is tech, which we have the in-house engineering team. And one pillar is advisory. We have an in-house advisory team across a few domains, as well as a network and community of other advisors that we can plug in to these companies to add value and support them.
Okay, so where do your investment opportunities come from? Do you have to go and find them, or do people come to you or companies come to you?
We get an awful lot of inbound opportunities. There's a lot of early stage companies that are great companies that are still struggling to secure capital at the moment. Particularly in AI. AI is the buzzword right now, and everyone wants to bring AI into their growth story or their business. And as part of our role as being tech first entrepreneurs, is we have to really quickly dissect which is real AI and the best use case of AI, and which is just adding the buzzword into the deck.
So when you're looking at a company, you presumably have to have some timeline in mind, because these results for returns aren't going to be instantaneous. So how do you approach that timeline? I would say not a problem, but it is a bit of a challenge, isn't it?
Yeah, I mean, we're investing in the early stage of the market, and those businesses have a full life cycle of growth that they have to go on, and we're there at the front end of that journey, getting them off the ground, getting the products to market, and helping them for the next phase of the journey, which is growth, commercialization, etc. So as an investor, we look at businesses exiting or having liquidity events in the 3 to 5 year range, but it can be longer. and it can be shorter than that.
And are there any areas of the market you could point out as being particularly attractive at the moment, without giving away specific company information, but just to give people an idea of how you go about your investment process?
Sure. Yeah, we invest in AI companies, and that's quite broad right now. So our thesis is AI first or AI enabled. And the AI enabled element means it can touch most sectors right now. And that creates opportunities and challenges. The opportunities are that AI is disrupting such a broad space, and it creates a lot of opportunity for great founders, great companies with great solutions to really make an impact. The downside is we're not experts in every sector. So we're finding that partnering with co-investors that have the sector expertise works very well with a tech investor like ourselves. But in terms of the types of businesses that we like academic, very defensible founders where their AI product or idea is much harder to replicate.
I think there's one last question I'd like to ask you, and then perhaps you'd like to, we'll have a second session to discuss this in more detail, if that's okay with you. Over the last 12 months, what sort of trends have you seen in the market in terms of corporate activity and investor responses? Have there been any positive or negative trends, or is there everything roughly as it was 12 months ago?
In our space, as I mentioned, it's AI across many sectors, and the corporates are becoming clients of these startups for their solutions, but it's creating a buy or build market where these larger companies prefer to buy than build and save the hassle and cost of trying to create the solutions that these great founders are capable of doing. So it's creating a really interesting space for early M&A opportunities for those founders that can get the traction and the customers in those spaces.
Well, Jack, that's very, very interesting. I think that's a fantastic introduction. There's a number of questions that are already springing to my mind, let alone other people's. So I think what we will do now, we will conclude today's session, and we'll be back in touch with you shortly to have another discussion on this in more detail. And we'll talk about valuations, cash flows, and other things that I'm sure most investors or prospective investors would be interested to know more about in terms of how you approach these challenges. So thank you very much to our audience today for listening and watching. As I said, we'll be back in touch shortly. If you'd like to like and subscribe, and on the screen soon, you'll see our contact details if you would like to get in touch with us directly. But for now, thank you very much indeed, and goodbye.